start recording. Okay. Oh, there's a few more people. Good morning, good afternoon. This is Cando's Webinar Wednesday. My name is Paul Macedo, Communications Director with Cando. We're just admitting some more people into the session, and then we'll get on with our introductions. So just a reminder, this session is being recorded. That recording will be shared later today at Cando's website, edo.ca. You go to the top, links to learning, and then drop the menu down to Webinar Wednesday, and then the recording will be there under today's date, June 23rd. In addition, we'll have the presentation materials posted there as well as a PDF file format. Okay. So today's session is with Farm Credit Canada. Today with us we have Craig Klemmer, who is the Principal Agricultural Economist with FCC. And he's going to discuss farmland values and how to negotiate a fair price when renting out your land. Craig, are you ready to take it away?
Yeah, perfect. Thanks a lot, Paul. And thank you very much for having me. I'm just going to take a second here and get my share my screen here. If you could just let me know, Paul, if it's showing up good. Should be.
Looks good, Craig.
Sharing it now. Okay, excellent. So yeah, I guess just a little bit about myself. My name is Craig Klemmer, Principal Ag Economist. What my role is at FCC is to understand risk in the operating environment and try to make sense of what that means for agriculture, for our customers, for the industry overall, and kind of see those opportunities. So that's just a little bit about who I am. So today we're going to talk about understanding Canadian farmland market and rental rates and what's going on there in the industry, and hopefully that's some information that can be useful for you and for your company. So before we get going, I guess I just would like to take a moment here to recognize, because while today's session is being delivered virtually, I want to acknowledge that I am here in Regina, and this is a picture of our head office in Regina, which is located on Treaty 4 territory, the original lands of the Cree, Anishinaabe, Dakota, Nakota, Lakota, and the homeland of the Métis Nation. FCC is a national company, and we do have offices spread out across the entire country, covering all treaties, unceded and unsurrendered territories, and the traditional homeland of the Métis. So we're fortunate for this land, and at FCC, we serve the industry that feeds the world by growing crops, raising livestock, and building their livelihoods on this land. So all of this is possible thanks to these treaties, and we are reminded that we are all treaty people. So I just wanted to start with that. I mean, at FCC, this is extremely important, and we're grateful for the relationships that we have and the relationships that we're growing between the Indigenous people and FCC. And I think there's a lot of great opportunities, and we're really excited to be part of today's session here. So as I kind of mentioned, I want to give just a quick overview about who FCC is, talk a little bit about the Canadian farmland market, some of the things that are driving it, and in terms of how that is impacting rental rates. And I think they go hand in hand, and it's kind of important because what we see is setting the value of land versus what's driving the influences in terms of direction of that land is ultimately going to be what that willingness to pay is and those opportunities for you when it comes to negotiating potential land rental prices, or to make the decisions of do you choose to increase the amount of agriculture activity within those on the reserve or other partners in the community there. So sorry, I was just trying to pull up my chat here. Just if there's any questions, please feel free to raise your hand or speak up. And I'm going to try and monitor the chat as well here. So if you do have questions, I'll try to answer them within the conversation. And then there's going to be some time at the end of the presentation here as well to discuss that. So the first thing, just kind of a little bit about who FCC is. You know, we're a crown corporation. We were founded in 1959, and we are a federal crown, meaning that we take direction from the government of Canada and how to best support and grow the Canadian agriculture and agri-food system. So, you know, that's not just primary agriculture, it's also the companies and the proportion of agriculture that is an input and servicing, you know, people that are growing crops, livestock, etc., as well as the food manufacturing and the agri-food side of things. So we are trying to serve that whole value chain. We're not a financial institution or a typical financial institution, I mean. We are the only lender that is 100% invested in Canadian agriculture. So we're trying to build strong relationship in the industry. We're playing the long game. We know that when you do well, that's when we do well. And we want to be one of those partners for your operation. Just so you know, when we think about agriculture, agriculture contributes over 155 billion annually to Canada's GDP. You know, food manufacturing is one of the largest manufacturing sectors in Canada. Agriculture represents about 2% of GDP. So it's a, you know, an important component of Canadian economy and one of the bedrocks of what we do. There's over 3 million people that are employed in the agri-food and agriculture industry. So it's an important driver of growth and opportunity. So when we think about agriculture and we think about FCC, we're committed to that growth and working with strong partners like yourselves to promote and to build the strength of this industry. If you look at just FCC in general here, we have a portfolio when we think about egg production and food manufacturing, egg business of over $41 billion. We have over 100,000 customers throughout Canada with just over 2,000 employees, and we have 100 field offices across Canada. So we're, you know, geographically, you know, dispersed, and we're in some, you know, obviously some very large centers, but also in very small and more remote centers as well. You know, who do we finance and what does it look like in terms of FCC? In terms of who we finance and who we work with for customers at every stage of the life cycle. You know, as I mentioned before, you know, we're here to service all the agri-food system. So from small artisan businesses all the way up to large companies who are exporting globally, we're looking to partner with you. You may be familiar with FCC's support of agriculture, which is our core business, and that's what we've, you know, been a part of for you know, the origins of where we are. But we also support the entire ecosystem that includes, you know, things before the farm gate and taking those products and processing those afterwards. We also, when it comes to Indigenous lending, we lend to a number of different bodies. So we lend to individual egg production operations. So you know, this is existing operations or startups. These would be farms on reserve or off reserves or any combination, and typically request egg production input loans, equipment financing, or other personal property type of loans or financing. We finance and work with First Nations or bands. Generally, we, you know, is a band under the Indian Act governed by its chief and the councillors. Partnering with them is an existing operation or startup. Farms or operations in egg businesses or agri-food businesses on reserve or off reserve. And typically when we're doing these partnerships, we're looking at, you know, crop inputs, similar equipment, quota, if there's looking into getting dairy or poultry operations, real property projects, really the gamut of what we're looking to do in terms of financing that, as well as working with people like yourselves, economic development corporations. When it comes to that, generally First Nations to operate quasi-independently from the First Nations or bands. Usually different corporations are established at different areas of this business that we'd be looking to finance. We're looking to finance, you know, existing businesses or startup operations, the same as what we're looking to do before, on and off farm reserves. You know, typically in this area, similar to what we're talking about before, crop input lending, farm equipment, quota projects, real property financing, leaseholds or corporate and commercial financing, we're looking at kind of doing all businesses and looking at any different partnerships that we can with the Indigenous community. You know, I mentioned a little bit about FCC and where we are. As I mentioned, the majority of our financing is in that primary production. So if we think about on the farm financing, 86% of our book is in primary production. So, you know, raising crops, livestock, you know, a little bit into in the fishery side of things. We're looking to do kind of all business agriculture, and that's the core of what we do. We have a fairly strong portfolio. This is the industry we know and love, and been a major part of who we are here. If we look at you know, the remaining 14%, it's really going into this ag business and food. And this is some area that we've been concentrating a lot of effort in and looking to continue to build this business. And when we're talking about agribusiness and food, we're talking about companies that are, you know, crop input suppliers and retailers, equipment manufacturers or dealers, feed processors, wholesale, storage and distributions, grain handling and logistics type company, food processing, you know, food grade oil refinery and blending, or going into biofuels, and we're hearing a lot of activities on those things. Ethnic foods, food and beverage manufacturing, wholesale and distributing. So we're really trying to play the whole gamut of where we can be there. Just so you know, if you know, I don't want to spend too much more time in terms of talking about FCC. Let's talk about what's driving the food or the land markets. But I wanted to just point this out. We do have resources on our website in terms of Indigenous agriculture and food. And, you know, if you're looking for projects and you're looking to get a hold of us, you can definitely visit our website. You know, at the end of the day, it's fcc.ca/Indigenous. And, you know, really encourage you to reach out and take a look at what we have online and take a look. But also, you know, we want to partner with you. And I know Jesse's been in contact with Cando, and we have a team that's here to support as well. And if you have any questions, please reach out to FCC at any point, and we'd look to partner with you for sure. So that's a little bit about us and a little bit about who FCC is. Really want to focus on what we're seeing in the land market and what's driving it, and then how did that impact rental prices and where we're seeing the industry moving going forward here. So when it comes to that, I just want to put out a couple numbers here. When we talk about farmland markets in Canada, you hear a whole bunch of different stories that people are making up in terms of what's driving markets. And we often hear the conversation, well, is it outside investors, or is it, you know, different hedge funds playing in? And definitely there are going to be some pockets and regions around Canada that we do see greater influence of this money outside of agriculture influencing land markets. But the reality is, when we look at the overall landscape of Canadian agriculture, 63% of the total cultivated land in Canada is owned by, you know, farmers, the people that are raising crops or livestock or you know, hog operations and dairy operations. 63% of total agriculture land is owned by the people that are taking care of that land in terms of the cultivated farmland. You know, if we look at those kind of by provinces, you know, if I look at the Prairie Provinces, and that was where I'm going to focus a lot of this presentation on, 63% of the land in Manitoba, or cultivated land in Manitoba, is owned by farmers. 62% of the land or cultivated land in Saskatchewan is owned by farmers, and 58% of the land owned in Alberta is tended by farmers in the industry. So when we think about that industry, I guess what's really important is when we're talking about rental rates and we're talking about the farmland market and what's driving it, it's very much the people that are actively part of the industry that continue to drive this farmland market. If we take a little bit, you know, bigger break, and this is from the census information from 2016, so it's a little bit dated, and looking forward to get those new numbers. But 13% of land is leased from government, 25% land is leased from others in the industry. And then there's a small, you know, some smaller categories where people are doing crop shares and stuff. But, you know, overall, we're looking at 25% of the farmland in Canada is being leased from others beyond government at this point. And I guess that's really important because when we think about land, one of the big things about it is the scarcity of land. We're not increasing the volume of land, and there is strong demand for it as operations are looking for ways to expand their land base, and that's going to create some I think opportunities for yourselves and your economic development units and teams. So, what drives these farmland values? Well, from the appraiser side of things, if you look at our appraisal staff at FCC, you're going to go to these major categories. First and foremost, soil quality. What is the makeup of the land relative to the weather conditions that you're going to have? What is the land productivity that you have? In terms of the overall production, you're talking about soil quality kind of again, but what is that productivity of land? What crops are you able to grow? What is the carrying capacity of the land if you're talking about livestock? Those are going to be major drivers in terms of what's driving that land value. But then ultimately, what is the local demand? How are operations expanding? Is the financial health of the people looking to buy or rent that land fairly strong? What is the overall feeling about the health of the agriculture industry in your region? And those are some factors, and those are kind of the no-brainer ones. But when we get into it and we start looking at the forecast and where do we see direction of farmland going, we actually start seeing some different components that are coming into play. So, when we start the conversation about what's setting the price, what is the price of land, I think we got to remember these are the main characteristics. So if you think about the land that you're that you have available to you and what you're looking to rent out, we got to be realistic about what are some of the production characteristics of the land that we're putting on the market or that we're looking to rent out relative to the other pieces of land in the area. And sometimes we got better quality soil and sometimes we have poor quality soil, and that's going to have a big impact on those land values. So I wanted to take a quick dive into, we do a farmland value report on an annual basis and, kind of set the context of where land markets are going and what we've been driving to or seeing the last number of years. And then we can start building out the storyline a little bit. So the FCC Farmland Value Report, just so everybody knows, I'm not sure if you're familiar with it, but it's a report that FCC produces every year. It's generally released sometime in the March, April time period. It's based on land values for the full calendar year. So these would be farmland values as of December 31st, 2020. And what we do there is we're reevaluating the same pieces of property. So we create benchmark properties around each one of the provinces in different geographical regions and try to set and reevaluate what the value of that piece of land is over time. And then that allows us to build a time series to see how land has changed in terms of that values over that time period. We leverage and use the expertise of our appraisal staff at FCC to go out and look at those pieces of land and reevaluate those. And then we are publishing these on an annual basis. So you can look back over time and see how land values have changed in different regions of Canada and how those have been adjusted and what are the factors that have kind of increased or decreased over time in farmland markets here. So if we look at the Canadian farmland value market and what happened last year, so if we think about 2020, overall farmland values in Canada increased 5.4%. And if you look across the province or all the different provinces here, at this point, we don't have farmland values for the territories. And in Newfoundland, we kind of have a changing marketplace that's kind of interesting. So you don't see a lot of farmland going up that's available for purchase for people that are actively looking to buy land, to cultivated farmland. A lot of that's being purchased by provincial governments, and there's some different noises happening in Newfoundland and Labrador. So right now we aren't publishing a price. But if we think about the remaining provinces and maritime provinces, you can see that land values increased from a high of 8% in BC to a low of 1.3% in New Brunswick. And you can kind of see how that's changed over time, or we'll show how it's changed over time. And each one of the geographical regions has different factors that are going to come into play. And some of it's the crop mix, some of it is just that regional and local demand that's going to be influencing those land prices here. And so that's what we're going to do. I would also note that we do a check usually if you go to FCC online. that you can, take a look at 6 month time period. We will post kind of an update of where we're seeing land values through the 6 months. I got a note here. If you have any questions that you have here, please, there's a chat function on Zoom, so please feel free to type any questions in there or reach out, and I'll try to address them here on the call here. So as you can see, we kind of see quite a bit of diversity or different pricing across the appreciations of land over the last across Canada last year. If we take a look at kind of where land has been trending over time, I think there's a couple things that need to be or point out here. First of all, if we look at the appreciation in farmland over since 2013, we can kind of see how it's slowed. And, there's a couple pieces that we need to recognize here. Back in 2012, 2013, 2014, we saw those very, very strong appreciations in farmland in Canada. And that was really driven by that commodity super cycle. So we saw, strong demand for commodities globally with the expansion of ethanol. And that really put, a big boost in land prices across Canada. And since then, though, as the market conditions have been tightening up, as growth in farm revenues has been tightening up, we've seen that appreciation slow over time. We did see through to 2019. 2020 was relatively flat. If we look at land value appreciations, up about 5.4% in 2020 as compared to 5.2% in 2019. And we kind of see that relationship of where things have been slowing. And part of that is that, if we think about the affordability of land, it's been tightening. If farm revenues aren't increasing relative to the cost, and we put in that component of farmland values in there, the affordability has been tightening across Canada. And so this is a fairly healthy market situation where we do see this slowing appreciation of farmland values. But that being said, land remains a very strong investment. It remains, there's still very strong demand for it, where operations are looking to expand their footprint, to getting access to more land, whether it's through rental or it's looking through purchasing and buying that land. The other thing that we thought was really interesting is we've started digging into this farmland market, and we can only really get a lot of good data out of Saskatchewan at this point. We're working with some other provinces, but what we do find is that when it comes to the amount of land turned over on a given year, we're looking at somewhere between 1 and 4 or 5% on a given year. And the old rule of thumb that I remember here about is that land turns over once every 50 years. So when we think about the availability of land and when it comes up for sale, it's quite difficult, and there's always a reason why people are looking to expand that land base, whether it's proximity or other things that come into play. So when I talked at the beginning, things that drive land markets, local demand is a big part of it. But how does that fit into your operation? How does it fit into the system? Proximity to where the farm is based, where you have land, all those things are going to come into play when it comes to driving land prices and what the market's going to look like. So I wanted to dive in. I'm going to look at the Prairie Provinces, where the majority of agriculture land is in Canada. Within the report, though, we do dig into all the provinces, and you're more than happy to take a look at it. And if there's some questions that you have on them, more than happy to have those conversations afterwards here too. But if we look at farmland values in Alberta and just how they've changed over time, we kind of see this similar story. We saw those very, very strong prices during the super cycle. We've seen a general trend of slowing farmland values. 2020 did see a fairly strong bump. And that was really because agriculture prices have been good, and we did see some really good markets here. So, you kind of see that playing through. What you do see, though, is when you start looking at those land values in Alberta, there's quite a bit of variation. And, this is where we start talking about, those regional factors. If we look just within Alberta, overall land values increased 6%. But if we look from region to region, we saw growth of 9.6% in that central area. So kind of designated by that 3 in and around that Calgary basin there of land value increases, to a low of 2.9% in the south, in Lethbridge and the southern parts of Alberta. So you do see quite a large variation in terms of overall farmland values across the province. We did see some really strong values up in the Peace region, up in the north part, at 8.2% as well. And what we did see, though, this year is that overall deliveries were really strong. So we did see strong demand for grain and oil seeds in the latter part of the year. And despite all the issues and challenges we saw with COVID and the pandemic, this industry did quite well when we talk about grains and oil seeds. Other parts of the agriculture industry didn't do quite as well, just because we saw all those plant disruptions in terms of cattle and hogs that reduced some receipts for some parts of the country. And then there was more and more disruptions for other parts, whether it was fruits and vegetables industry, greenhouse industries. They had some more disruptions than maybe the grain and oil seed sector, which actually benefited by lower demand for rail, and that allowed more exports to happen in the industry. So if we look at this kind of throughout the other prairie provinces, you kind of see some similar trends. You look at Saskatchewan, we saw those really strong prices during the commodity super cycle, and overall we've seen this slowing appreciation in farmland values. 2020 numbers came in, relatively flat from 2019, 5.4%, as compared to 6.2%. We did see some of Saskatchewan seeing some struggles on weather and just kind of taking some of that optimism out, and people maybe not as aggressive in terms of bidding for prices of land in 2020, but overall we'll continue to see these strong appreciations. I guess the one thing that would be important to note that I should have said at the beginning, when it comes to farmland values in terms of where they're going, they've been increasing every year since 1992. That was the last time that we actually saw farmland values decline. So when we think about it as an asset and we think about it as an opportunity, we do see that overall farmland values have been increasing, and the value that you can extract in terms of rent is increasing as well. For 25. So I see that we have just kind of a question or comment here. Fee simple property for 26 acres roughly. Find an estimated value. We have only had one other agriculture use permit, and the number came out to be $162 an acre. Is this justified? I'm going to keep moving on because I actually want to talk a little bit about land rental rates. So I appreciate the question there, Melissa. So, kind of a similar story in terms of, when we look at Saskatchewan, we break it out and we see these differences by region, and that's going to drive it. So Manitoba, I feel like I'm telling a very, very much of that broken record here. Manitoba, similar story. We see this slowing appreciation in farmland values here, but overall, we continue to see land values appreciate across Canada, and we saw that kind of from that first slide. So one of the things that I want to talk about is why is this, ownership can be very expensive. And if we look at where we are, 33% of farm revenues will be going just to farm purchases. And that was some research that we did this year, versus if we think about renting, roughly 20% of farm revenues in 2020 would go to renting land. So what we do see is, that proportion of renting versus farm owning, we're starting to see some shifts in terms of ownership and those opportunities. But, the cost of renting versus owning is quite a bit cheaper. And the difference would be that investment cost perspective. So what we did this year, we actually started surveying and doing research across the country to understand what are the rental prices relative to land in different parts of Canada. And we did this through a combination of surveys. We did this with working with our appraisal staff, and we did this working with customers to find out what are people paying for land relative to purchase prices. And this will kind of start making sense. What we did find is that rental rates in the Prairie Provinces were on the higher end. So if we think about Saskatchewan, average rental prices in Saskatchewan were about 3.3% of the purchase price. So part of the reason I wanted to talk about these land markets in terms of the value of land is it really is one of the main setting pieces of what people are willing to pay. And we've done this research kind of off and on for the last little bit. We're finally going to market with it and sharing it. But what we did find is that on average, if we think about Saskatchewan, land prices have been around that 3.3 to 3.4, 3.5% on average. If we look at other provinces where we have higher land values, so, in the question, Kamloops, and we think about BC, land prices overall are generally higher, partly because of the crop mix and what people are able to do with that land and the revenue. but land rental prices are averaging about 1.8% of the purchase prices. If you think about Ontario, we're seeing farmland markets or rental rates coming in somewhere between 1 and 2%. Our average was 1.7% of rental rates or for rental prices in those regions. But there's quite a wide variation in terms of those rental rates. So if we think about where they are in in BC, for example, there's a low of 0.5% to a high of 3.15%, depending on what those crop mixes are, depending on what the quality of land is. If we think about the Saskatchewan and the Prairie Provinces, we're seeing that 3.3% is the average, to a range of 1.6% to 5.85%. So what does that actually mean? So if we kind of go back on the first, one of the slides in Saskatchewan, I kind of showed a range of the prices by different regions. And what you see that, on average, say a piece of land in Saskatchewan is say $2,000 per acre. It's going to be higher or lower. But a piece of land that's $2,000 per acre is going to have a rental rate range somewhere between $30 per acre and $120 per acre, with an average of about $66 per acre. So that's a pretty wide range in terms of what we're seeing in those overall rental prices and what we can get out of that. Things that are going to come into play, like I said at the beginning, is what is the quality of land there? What is the capacity, or what are the crops that you can grow on that? Because quality of land is going to vary depending on the type of land or the usage of that land. So if you think about Alberta, for example, parts of southern Alberta has some very sandy land. Well, if you're on an irrigated system, or you can irrigate that land, and there's quite a bit of land development on there, that's going to actually be very favorable land where you want to have sandier soil, so that when you irrigate, you get a better crop. Conversely, if you're not irrigated land and you're looking at dry land, you probably want something that's got a little bit more clay in it. And that's what's going to define a better quality land for dry land. And that's because it will retain more moisture and get a crop off. So, one of the big challenges there is determining what is the type of land that you have available, and what does that look like relative to the crop mix that people are growing. So if you're in BC, for example, and you're looking at land that can be used for orchards or higher value agriculture, fruits and vegetables, you're going to see that the ability to pay for that land is going to be quite a bit higher than if you're going to use that crop or that land to grow, barley or other grains for feedstock. It's going to be quite variant. So, specific to the question here in terms of Kamloops, 25 or 26 acres at $126 or $162 per acre, that would be pretty, I'd have to double check the numbers here, what that works out to as a total purchase price. But depending on the quality of the land and what it's being used for, it may be justifiable if we think about land rev, averaging or selling or renting for as high as 3% in BC. So there's a number of reasons people are going to be looking for this land, and part of it is finding that strategy. But, when we think about land rental prices and costs there, renting land is quite a bit cheaper. As I mentioned, if we think about total farm revenue, it's about 33% of total farm revenue to purchase land, as compared to about 20% of farm revenue at the aggregate to rent the land. So when we look at who's targeting and what those opportunities are, there's a lot of expanding operations. It meant that land is pretty scarce, and we do see that demand increasing for operations looking to expand and build their land base. As equipment continues to get bigger, people are looking to spread that investment cost over a greater number of acres. Young farmers that have tight working capital, or other operations that have tight working capital, it's a great opportunity to expand that land base, while not reducing their working capital to make those purchases in farmland. So there's a number of reasons why people are looking to rent land, but at the end of the day, it's that overall demand of land is extremely high, and people are looking for those opportunities to kind of come forward and find those opportunities. So I wanted to talk a little bit more about these factors that are influencing Canadian farmland values and prices moving forward. And, I talked about the soil quality and things like that. Those are the factors that kind of set that land price. but there's things that are going to drive where the future is in terms of what the future rents are going to be for that land as well. And what we do see is there's a fairly clear connection, between farmland values based on revenues and interest rates. And as interest rates are declining, we see that capitalization in farmland values, and when farm revenues are also really strong, we see that appreciation in farmland values also increasing. When we think about it, it's going to be different by different provinces. But, if we think about what is the primary commodities driving that, it's going to range across the country. So, when we look at BC, supply managed sectors, dairy, poultry, fruits and vegetables are a major driver. When we think about the Prairie Provinces, it's basically, cattle and grains and oilseeds. In Ontario, once we get into Manitoba, we see it more on the oilseeds, pulses, and a little bit more in the hog industry. And then once we get into Eastern Canada, dairy is a big driver of farmland values, as well as the corn soybean rotation in terms of driving those land values. I wanted to talk a little bit about this direction and where things are going. As we talked about interest rates, those are one of the major drivers, and we see that capitalization of interest rates over time. And what we have seen here moving forward, and where we kind of forecast interest rates to be going, is that average borrowing cost, the cost of money here based on the Bank of Canada's average borrowing costs has been extremely low. If we think from 2017, average borrowing costs of around 2.8%, increasing to less than 4%, and then we've seen this really sharp decline through COVID that you can see in January of 2020. We're basically at rates of 2.4%, and we did see a little bit of a bump up, but things have been flattening out, and they're still looking for market directions here in terms of where rates are going. We do hear that rates are going to go up, and that's going to put some limited opportunities on land, but that being said, they're historically low. They're very, so this is going to continue to be supportive of investments in land and investments in land improvements. And that's going to continue to drive up that market, and it's going to continue to drive that demand and opportunities for the rental markets in terms of what people are looking for. Just kind of putting this into a little bit more context, but we're going to start seeing some pressure there, because what we do see is on this investment side of things, one of the things that's going to drive fixed rate investments and ultimately land is yield curves. And if we look at how yield curves have changed over time, and these are the May numbers, and we can get up, starting to get updated June numbers here, but I just thought this would put it in story. If we look at that top line, overall light blue, that's the average yield curves that we saw for Canada for bond markets over time. So if you look at a 1 year or a 1 month bond through the Bank of Canada, you're paying about 0.9%. And as you went to a 10-year bond, the number's close to 1.6. Where we are right now, if just kind of looking at these historically, we're really cheap based on, money's really cheap at this time still. We have seen some run up in yield curves, and now we're starting to look at 10-year money getting closer to what that longer term average is. And that's kind of that inflationary pressure that people see over time coming into the markets, higher rates moving forward. And that's going to help or put a little bit of a hold or maybe put some downward pressure on farmland prices as we move forward and we see these markets continuing to evolve here. The other thing that we need to consider when we think about the macro economy when it comes to land prices is what is happening with the Canadian dollar. When it comes to agriculture, we're exporting, I believe 70% of our crop that we're growing in Canada is being exported. When it comes to livestock, over 50% of the cattle and hogs that are produced in Canada are going into export. These is live animals or processed product. So what we do see here is that the value of the Canadian dollar is going to be extremely important. And what I do see here is that since 2020, we've seen this pretty strong run up in the Canadian dollar, moving over 80 cents. And now we're starting to see some of this pullback. If we think of where this is going to go, the expectations are, as the US economy gains some traction and growth there, that we're going to see the Canadian dollar starting to soften here. Probably the third quarter, starting to see some more softening, but it's still a little bit uncertain. but it's really important in terms of impacting the health of Canadian agriculture in terms of what we see for revenues and where we see that growth opportunity. So I think these are important factors that we need to consider when it comes to those opportunities and where we see those future values moving forward in terms of the land markets. I put in the euro here and for context just to see where the market's been playing. But one of the things you see is that the Canadian dollar relative to the euro has been trending a lot more flat. We did see some run up because of higher commodity prices in 2021 and the strength of demand for lumber and oil specifically helping to support that. So what does this mean and why am I telling you all this when it comes to farmland rental rates and farmland markets? Well, at the beginning or just at this beginning of the section, I wanted to highlight that if we think of land prices are driven by farm revenue, interest rates, and that's going to kind of give you that future expectation of land. This is all really important when it comes to setting those prices, because when you're setting land values or setting rental rates, it's not just about the price of the price of land currently, but I think you got to be considerate of where the land market is moving. Generally when we talk about rental rates and terms there, we're looking at multi-year terms or leases or arrangements that we're going to make with these different operations. So if you're looking to get a fair price in terms of your land, it's also worthwhile understanding what is the current price of land, what is the direction of it, and what are those opportunities in terms of finding a fair rent for yourself and for that operation. Because at the end of the day, you want both parties to succeed, and everybody needs to make sure they're getting their fair share on that. So if we look at where farm rent, cash receipts are increasing, we expect them to increase somewhere between 6 and 8% here in 2021. Continued strong growth there, especially for grains and oilseeds, and that's going to really be supportive, especially for land values in the prairies and where we see crop production as a major driver of that. So I think those are important factors to consider as we're talking about land rental rates. So just kind of moving this forward in terms of, I've talked a lot about land values, but when we think about farmland rental rates and what are the major drivers and opportunities, there's some things that I think we really need to consider. What are the future opportunities? So where is land prices trending and what does that mean for rental rates? Well, we've seen that overall rental rates as a proportion of farmland values on average remains similar. So if we think about the Saskatchewan example, currently farmland rental rates market price is roughly 3.3% of the purchase price of land. So if you can figure out what is land that is similar value to where your rental rate is, and you apply that multiplier on it, you're going to get some sort of, a pretty good ballpark of what is that market price of land going to be. Other things that you need to really consider when it comes to farmland rental rates is what is the structure that you're looking to do and who's assuming the risk. And, there's different structures out there. Some people look at crop share type of things. I imagine for the majority of the people here on the call or people that are listening, you'd be looking at cash structure, cash rent. That's the most popular in the industry. It's simple. For the person renting land, they know exactly how much money they're going to get from that land. For the other party that's renting the land, they know exactly how much money they're going to get per acre from that land. So you do see that balance there, and it's pretty easy to find a fair structure in there. As I mentioned, expected returns are going to be part of that conversation. So if you look at the quality of your soil and that comes into the pricing side of things, how is that relative to the land around you? And you got to be pretty realistic about what is the quality of the land that you're looking at. And I think the biggest and most important part of any farmland rental agreement is the relationship that you have with that person. I know that, a number of my friends that are in the agriculture industry, when it comes to people that they have strong partnerships with, they've been renting the land for several years, they're willing to pay a bit of a premium for that land. But that relationship, and you got to look at what's happening in that local demand and what's around you, because there are some other things that are coming into play on those relationships beyond the land piece. Obviously, in your situation, you're not looking to ever sell any of that land, versus some of the rental prices that you may be hearing is based off of the idea that in 5, 6, or 10 years, they're paying a premium for first right of refusal for selling that land or when that land comes up for sale. So when you're looking at what's a fair rental price for yourself, you got to remember or try to consider what are those other opportunities or what are those premiums that are being paid there. But the one thing that I would say is that long-term relations between, individuals and farm operations and reserves, those are all going to come into play in terms of establishing that farmland rental agreement and the duration that you're looking to have those rental agreements. Majority of rental agreements seem to be 3 to 5 years in terms of what I'm hearing from the people that I see in the industry. When you're going year over year, there's just less security in it. And one of the benefits of having these strong relationships and good rental agreements is that there's some areas and opportunities to dictate some of the terms of which the way the land is managed as well. Bigger operations and newer operations are using a lot better equipment in terms of soil health and giving back to the land. And what we do see is some, continuing preserve the soil quality, and that helps to maintain those overall farm quality. Anyways, I know we're getting close to the end of the time, and that I wanted to share that. I wanted to leave some time for questions here, so I'm going to stop sharing my screen. But if there's any specific questions that people have on their mind, I'd be more than happy to answer those. And yes, thank you very much for your time. I really appreciate it.
Thank you so much, Craig. So are there any questions for Craig? We've got an expert with us today, so this is a good opportunity. As a reminder, all the materials that Craig has presented, plus the recording of this session, will be available on Cando's website, edo.ca. Just go to the links to learning tab and pull down the webinar Wednesday. So that'll be available later today.
I'm kind of curious, Paul, this first question here in terms of what's a fair value for your land. It's got me really thinking, what is that right price in BC in terms of Kamloops? And if you think about, I'm just kind of trying to do, it's probably a presentation mistake, but if you look at where you are and you just kind of take a quick calculation, in the Farmland Value Report, if we think about the Kamloops area, I'm just thinking, well, the Kamloops has got to be considered in our Okanagan area, I guess. But if your land price is say 24,000 an acre, which might be high, pretty difficult times 0.018, you get pretty high land prices there. So that's that works out to well over that 162. If it's somewhere in that $15,000 per acre, which is kind of the bordering area, times 0.06, you get into this $200 an acre. So that rental price that people are paying there, depending on what it's being used for, it could be justified. I wouldn't rule out that price. It depends on what it's being used for. So it's really difficult to say what is the right land price for a negotiation. These are, what we have here. I think these are resources that are good starting points to consider what's important and to have those conversations with potential tenants for your company. So I'm not sure if there's any other questions in the chat. Anything curiosity, but
yeah, there's another question from Kim. Do you see it? Yeah.
So property lease potato farmer that has a tax issue as it's located in the ARL, but I think it's taxed at residential value. So I'm not sure I can answer that. I'm not a tax expert, so I would be, in terms of where we are, in terms of how it's being classified and the issues there. I'm not sure that I want to venture into going into that and saying, because I think you got a tax specific question there. So sorry, I can't help with that one. I do know we have some partners that at FCC that if it's something that's an issue, we can maybe reach out to some of our other partners that we could maybe have a bit more input on that, that type of specific one there. So if there isn't any other questions, I would be, please feel free to reach out to myself or, reach out with Jesse and he'll get you in contact with us. And we'd be more than happy to sit down and have conversations and have, investigate these a little bit more in terms of how we can partner. And, we want to be one of these partners for the industry and really push the agriculture industry forward. So, please feel free to reach out to Jesse and we'd be more than happy to follow up on these conversations in the future.
Jesse, can you, can you put your contact information into the chat so that folks can just copy paste it?
I was just about to do that, and I was going to ask Craig, is there a simple link we can give where they can download the Farmland Values report from FCC?
Yeah, we can definitely do that. And I guess I would, just to that point, Jesse, there's a lot of information that FCC has on our website. So beyond just the Farmland Values report, but if you go to fcc.ca, there's a lot of information. Our group is under the economic section. So if you're looking at not just farmland value prices, but you're looking for different trends in the industry, we are sharing that on a regular basis. And, please encourage you to take a look at that and see if there's opportunities about, what we're seeing happening in the agriculture industry across Canada. So I did share the link for the Farmland Value Report. I think it's a really good starting point. If you do look under the knowledge tab under FCC, which you can get from that link as well, there is an economic section. And in there, we actually have a couple of blog posts talking about farmland rental rates. So the chart that I did share in the presentation is available there. We do have some further discussion in terms of farmland rental rates and what it costs. And, please check that out as well.
Fantastic. Thank you, Craig. So what's important is, we're trying to share valuable information with you and hoping that this information spawns some further thought and ideas. But what's really critical is you now have contacts at FCC that you can kind of continue your dialogue with post session. So that's really important. So take the information back to your community. But if you have some follow-up questions, some ideas that you want to kind of bounce off Jesse or Craig, please use the contact information and pursue that afterwards. So I want to thank Craig Klemmer for their presentation today. Thank you so much for sharing your expertise. And I want to thank you all for taking time out of your busy day to spend with us to learn a little bit about farmland values and how those values are determined. I think that's really important. And again, the session and the presentation materials will be available later this afternoon at edo.ca. So thank you all very much. Enjoy the rest of your day. Appreciate it.
Thank you.